Now, talking about the banks, during COVID-19, banks have been asked to come to the rescue of consumers by providing payment holidays on bonds, for example, joining a government-backed loan scheme. But the banks themselves are paying the price in the form of rising bad debts, with many more consumers simply unable to pay their debts. Standard Bank released results today, reporting profits fell by a whopping 44% for the 6-month period that ended in June. Impairment charges due to loans not expected to be paid now increased to around 11 billion rand. It's not only Standard Bank feeling the pain of COVID. ABSA has flagged a drop of up to 97% in its headline earnings. All right, let's focus on Standard Bank. We're joined now by the CEO of Standard Bank, Tshabalala, on the line. Mr. Tshabalala, thank you very much for being with us. Firstly, I understand that Standard Bank has communicated with clients about this Experian breach, but have you been very concerned that this credit rating agency, I'm not sure how it works, but it sounds like someone posing as somebody else got access, even though it's not financial data, to 24 million people's information?
Good evening, Francis. It's wonderful to talk to you again. I think you've hit the nail on the head, but I wonder if you could allow me a minute or two just to make a few points, because what you're raising is a hugely, hugely important matter.
Sure.
The first thing I'd want to say is, as an executive of Standard Bank, I have to recognize and pay homage and empathize with our clients whose data has been stolen in this breach. It's really frightening when you reflect that someone's gotten hold of your data and they may be using it. And it's frightening and worrying at two different levels. The one is it has a material negative impact on one's dignity and identity when somebody has stolen your information. And secondly, it has a potential negative impact on yourself as an economic agent. And so it's something gravely to be regarded. It cannot be swept under the carpet. That is why the financial institutions, including Standard Bank, have worked so hard with SABC, with the Banking Association, with the law enforcement agencies, and with Experian to make sure that we get to the bottom of this. And it's been reported, I'm sure you've seen the reports, and I think you've alluded to them, that the perpetrator has been apprehended. And there's also a report that suggests that the data in question has been retrieved, but it's not entirely clear whether it's gone any further than that. So the reports are out there. The information here relates to people's identity, their home addresses, their places of work, their ID numbers, so it's mainly demographic information, which is not necessarily directly related to banking information, but can be used to impersonate the customer and perpetrate fraud on them. Banks have worked hard, and I can speak for Standard Bank and confirm that we've raised the levels of awareness in our teams and heightened our risk management frameworks to protect our clients. And we've also advised our clients on what to do to protect themselves. And so, yes, you're right, it's a big matter, but I can assure you that everything is being done to maintain the safety and soundness, not just of the system, but of individual clients' own data and information. And we feel quite comfortable that enough has been done.
All right, and I think your customers will appreciate that you're taking this very seriously. Thank you for that explanation. All right, let's look at your results. You've described this pandemic as the worst economic shock in living memory. How do the effects compare to the global financial crisis, for example? And you've had to write off all these loans. Are you fearing that could continue? According to some, the jobs bloodbath that we're seeing in South Africa may be just starting. There may be a lot more to come.
My word. First of all, yes, this is definitely something that's not been seen in 100 years. We, in our scenario planning, are projecting GDP decline of 8.5% in South Africa this year. That's worse than anything seen since 1918, which coincides actually with the Spanish flu. Secondly, we're projecting that the recovery will be next year, so it will be roughly 4.5%. The economy will still be smaller next year than it was in 2019. Yes, you are right that unless swift action is taken by social partners, led by government, but definitely social partners, you could have a jobs bloodbath. I, however, am a glass half full person, and I'd like to point to a couple of data points that suggest that we could do something great as South Africans. So first of all, what we're hearing from NEDLAC, where the labour movement, government and business are talking about a plan that has to be settled within the next 3 weeks that will be used as part of the recovery plan. The features of that plan will include executing on the infrastructure projects that the public and the private sector have been speaking about, especially focused on water, to start with the water sector. Secondly, improving the country's competitiveness. Thirdly, improving the electricity sector. Fourthly, releasing the spectrum. And there are a number of things in that list of structural reforms that need to be done, which, if executed with expedition, just like you've seen done in the case of health in response to COVID, we could have quite an interesting period ahead of us if only people got things done.
I was going to ask you, business confidence, your fortune so linked to the economy of the country. So you are at least looking forward to that recovery. Till then, there could be more pain, like we were discussing. The banks have come on board providing those payment holidays. I think you said more than 92 billion paid out by Standard Bank, although you will still get the interest for that. But what about the loan guarantee scheme? Banks were meant to be aggressively lending to small businesses, to businesses that would be mostly backed by government. But it's hardly moved, and we're hearing that the banks didn't change their lending criteria at all, although it may have also been affected by demand. Just from your perspective, has Standard Bank been on board, as it were?
Francis, we have always insisted, and I would respectfully insist on this call with you as well, that banks need to play in their lane. They need to do what is natural for banks. They need to fulfill their mandates to society, which is to take deposits and recycle those deposits into loans for productive use and not put the system at risk. So that would be the first big point I would want to make. Secondly, Standard Bank in the first half of the year has extended roughly 107 billion rand in South Africa in the nature of payment holidays to the benefit of our clients. And we did this long before any scheme was put in place by the authorities. Thirdly, in respect of our corporate and investment bank, the relevant amount is 48 billion rand. And so when one considers that in the context of the guarantee scheme, which is in addition to the solution that Standard Bank itself has provided and the solutions that other banks have provided, it's no surprise that people have not drawn down on that scheme to the same extent. In addition, it is important to remember that the scheme was not in the nature of Keynesian helicopter money. In other words, simply distributing the money. The scheme was meant to be for viable businesses, where the guarantee would be provided if the banks had provided those monies in accordance with the rules of the scheme. And I would submit to you that we are sticking within the four corners of those rules.
All right, we appreciate that explanation. We'll follow the fortunes of that scheme and the results of the other bank. We're just starting to focus and realize the effects on the banking sector itself of what has played out for recent months. Thank you very much for your time. That was the CEO of Standard Bank, Tshabalala.